I think that when you look at entrepreneurs, you're also looking for like, are they thinking about how to actually bring this to market?
I had to interview Max. It was this retrospective piece. And I asked him, is there anything he would tell his younger self to do differently? And Max told me that he took a year off after the company was sold to eBay. He traveled the world, he lived on a beach, and then he said, it was the worst year of my life.
Everyone thinks they need to go to the Ivy League schools. They need to have an MBA. They need to have the PhDs.
Employees from PayPal went off and started like the next generation of great internet companies. LinkedIn, Reid Hoffman, Steve Chen, YouTube, Jeremy Stoppelman, Yelp, Elon Musk, of course. I mean, this was like a Ayn Rand novel brought to life.
Hello, everybody, and welcome back to the Startup Shortcut. I have a good one for you here today. We have a guest, Michael Gibson, who is the co-founder of the 1517 fund, which backs dropouts and unorthodox scientists. Unique combination, right? So previously he was on the founding team of the Thiel Fellowship. He is also the author of Paper Belt on Fire, How Renegade Investors Sparked a Revolt Against the University. So to say that we have an interesting conversation coming your way today is an understatement. Michael, glad to have you here.
Well, thanks for having me on.
Well, maybe just to kick it off, give me a little bit of a rundown, like how you ended up at your fund, a little bit of your pre-fund life per se. Give us a little bit of a teaser of that, and then we'll kind of take it from there.
Yeah, my co-founder and I are very unlikely venture capitalists. Danielle Strackman is my co-founder. She, way back before 2010, she started a charter school in San Diego. It's called Innovations Academy, very much project-oriented to the extent that it could be. And she was a school principal for a period of time. And then for my part, I thought I was going to be a professor of philosophy. I have a background in ancient Greek, studied the classics, and moved over to philosophy. So I thought I was going to be a professor, but I also wanted to be a writer. I dropped out of my doctoral program, and then I had built up some experience writing for magazines and newspapers. I hit this crisis moment, sort of quarter life crisis in my life. I decided I didn't need a PhD to be a writer. Some of my favorite writers had PhDs for some reason, the poet T.S. Eliot. And when I was 18 or 19, that intoxicated me to the point where I thought it would be fun to have one myself. But after I lost my 20s to the library, I think my ass was flat for sure from sitting in the library chair for too long. But yeah, I realized I really wanted to write. I dropped out. My first gig was writing for Technology Review. That's a magazine owned by MIT. Started out as their alumni publication, but they expanded to national distribution. And it was a bit of a baptism by fire covering science and tech. It was a lot of fun. I covered all sorts of different things. But one story that jumped out was I interviewed the CTO of PayPal, Max Levchin, the old CTO before the company was sold to eBay. Max was part of that team that led PayPal's growth and was eventually bought by eBay for like $1.5 billion. I had to interview Max. It was this retrospective piece. And I asked him, is there anything he would tell his younger self to do differently? And this was 2007, actually. And Max told me that he took a year off after the company was sold to eBay. He traveled the world. He lived on a beach. And then he said, it was the worst year of my life. That's where my ears perked up. And I was like, what? I said, what do you mean? And he said, well, all my friends were building these great companies and I was just consuming things. It's like, okay, this is interesting. And I said, who are your friends? And at that time, I knew some of these companies, but I didn't know really of this term that has become known as the PayPal Mafia. You know, all these former employees from PayPal went off and started like the next generation of great internet companies. LinkedIn, Reid Hoffman, Steve Chen, YouTube, Jeremy Stoppelman, Yelp. Max was working on something new. David Sachs, who's famous now for the All In podcast, but he was working on things like Yammer. And then Elon Musk, of course. I mean, the roster is just incredible. And in 2007, it's tough to go back in that time, but this was quite astonishing. I mean, this was like a Ayn Rand novel brought to life. And then this vaguely public intellectual libertarian hedge fund manager, Peter Thiel. So that's the first time I came into contact with him, where I learned of his name. I just thought he was a fascinating person. Fast forward a couple of years and I ended up meeting some people who worked for Peter. They mentioned there was this job opening. So I inquired. It was a researcher writer position. And because Peter had intrigued me since that Levchin interview, I was like, okay, I'm interested. You know, the job description was evolving with each interview. And eventually I ended up in an interview with Peter and we just got along. We talked philosophy for an hour, hardly any finance. And then he asked me if I'd help him teach a class at Stanford Law School on philosophy and technology. At the time I was freelancing, and I just thought, okay, I could do this for a year. This is really interesting. And so I told Peter yes. In the meantime, I'd be an analyst at his hedge fund and also working on this law school class. Okay, so that's how I was hired. And then I show up to work the first day, and the night before, I can tell you the exact day, September 27th, 2010. The reason I can tell you that, because it was just like such a wild day, is I showed up to work and my colleague, Jim O'Neill, came to my desk. They had put me on the trading floor. I'd never been on one before. And he's like, hey, we got to go to Peter's house. Last night on the plane ride from New York to San Francisco, we decided to start this anti-Rhodes scholarship. I'm like, I'm in. I don't like Rhodes scholars. They're prestige whores. It's like, all right, what is this? He's like, oh, we're going to pay people to leave college. So we go to Peter's house. All right, it was TechCrunch Disrupt that day, big tech conference. And they had decided they had to announce this program at that conference. On Friday that week, this is how long ago this was. On Friday that week, the movie The Social Network was set to premiere. And the script by Aaron Sorkin had been leaked. It was clear that Zuckerberg was going to be portrayed negatively, but also in one tiny scene, Peter. And so I think the idea was like, okay, let's get this idea out there, change the conversation, and get started. And so, yeah, I go to this conference with Peter backstage. Then he's on stage. He's being interviewed by Sarah Lacey. You can see this on YouTube to this day. And he's talking in the present tense. He's like, we have this program. We're taking applications. And we had just named it in the car ride over. We're like, okay, it's $100,000, 2 years, and you have to be 19 or under. That was basically it. And we launched the Thiel Fellowship. And that was my first day of work. I got pulled into that, ended up co-running that program with some people for 5 years. We brought on Danielle 2 weeks later. She had known someone in the Thiel and had assumed the program was well underway because she had seen the interview on TechCrunch Disrupt, but it was still very much day one work in progress. And, she came on within the first couple weeks and then we were off. So yeah, I visit campuses across the country. Students are always wondering, how do you get work in venture capital? And I tell them there are 3 ways. Number 1 is you were in Silicon Valley in the 1970s and you're still there now. Number 2 is you were a successful entrepreneur and now you want to take the other side of the table and join a firm or start your own. Lots of people have done that. And then number 3 is just some weird idiosyncratic story like ours, where like Danielle and I would never be hired by a venture capital fund. We just don't have the experience or background. But since we started our own, we were able to get going. And that happened because, we ran the Thiel Fellowship for 5 years, just saw extraordinary things come out of it, helped launch Ethereum in 2014, gave Vitalik Buterin one of our grants. Another popular, famous company is Figma. We helped start Figma in 2012. Dylan Field gave him a fellowship. So by 2015, we thought, wow, we're giving out these grants. We could be making investments, and that would allow us to work with more people. There would be the potential for upside. And yeah, we hit the road and raised a small fund and have been in business since. Our main thesis is to continue that idea behind the Thiel Fellowship that, skill, talent, creativity matter more than credentials, that some ideas can't wait, and that we can back people who are overlooked, who, maybe they need to take time off to work on something outside of school, or maybe they never went to school.
Wow. So much to unpack there. That's a pretty incredible background, man.
Yeah.
I mean, I feel like, you have so many different unique perspectives due to your involvement, right? So you were in philosophy, then you have a passion for Greek mythology, was it?
Greek philosophy, poetry.
Greek philosophy. Yeah. That's amazing. That's incredible. And I think that what's also interesting is how you were a researcher, a writer, you worked for other publications. So I feel like you have like this investigative journalist inside of you. You know what I mean? Do you feel like there's a translation with that, how you invest?
Yeah. When it comes to the research side, I think perhaps I have some experience from academia, sifting through journal articles, looking for titles and building up a research agenda. But on the other hand, I do think it's more the research of the journalism, actually, when it comes to vetting companies, understanding founders. It really is an investigative process when it comes to conducting diligence on a company. Just really being unafraid to ask tough questions, to see. I think Jeff Bezos, I don't know if they still do it, but Amazon used to have this policy where if you proposed a new product or feature, you'd have to write a press release in order to announce, what is the news going to say that day the product comes out. And I think the intention behind that is something I think I pick up on when I think of things in terms of journalism, which is just like, what is the true significance of this idea? And, how's it going to fit into the wider context of everything that's out there? So in some ways, I think my background in journalism was a greater preparation than, basic research of the academy.
It's a really interesting perspective. And I think that, what that probably taps into, that press release example you just gave, it's like, I think that when you look at entrepreneurs, you're also looking for like, are they thinking about how to actually bring this to market? Because you get involved with companies at the pre-seed stage, seed stage. What are you looking for stage-wise? Like, tell me a little bit about like what you're actually getting involved with right now.
So 1517 is an angel pre-seed fund. We love being the first money in. Our checks can range anywhere from like 100K on the angel side to on the, let's say, solid pre-seed, 500K to $1 million. At that point, we do say we are the kiss of death for consumer. We've had trouble there, so it's hard to know what we're looking for. But in terms of the three elements of any that an investor makes, they're going to use three main elements. It's going to be the team, market sizing, and then the current state of the product. And of those three, we give by far the most weight to the team. That's something we learned when it came to evaluating applications for the Thiel Fellowship, working with Thiel Fellows, selecting those fellows. And that's why we're comfortable coming in early, because we have to know the team is capable of pulling off something quite extraordinary. We've developed our own heuristics. When we first ran the fellowship, we were too imitative of colleges. We had an application and asked for things like, what was your GPA? What was your SAT? And in the event, we noticed that these things had little predictive value when it came to forecasting the likelihood of success for someone in the program. Some of them were negative, like some of these achievement and awards that colleges look for. Like one of them was the Intel Science Award that became negative because that was just like a popularity contest that people won by looking good to committees. There was no substance actually in many cases behind their science projects. We developed this sort of ad hoc makeshift descriptions of character traits that we look for in people. Number one is that we found in those early days was just like the intrinsic motivation. Are you someone who is good at satisfying the commands of some institution? Write this essay, take these tests, fill out those applications. Or are you someone who's just intrinsically curious and building things and executing on things? And so when it comes to evaluating that pre-seed angel, we're looking for those things we could get into. But the market sizing and the current state of the product, they do matter somewhat. When I say consumer, it's like we wouldn't invest if it hadn't been in anyone's hands yet. It doesn't have to be a lot of users, but as long as there's some kind of intense engagement. And then on the enterprise side, for the pre-seed level, we'd love to see some degree of, let's say, pilots, some kind of prototype in action, some way to validate the value prop externally, that someone is willing to say, oh yeah, this thing's going to be useful. And if that all lines up, we're prepared to make an investment. We will follow on. We write checks into companies across all different categories. One thing 80% have in common is that they're started by someone who doesn't have a college degree, or one of the founding members doesn't have a college degree. The other 20% are in this sort of sci-fi tech, we say. Those people can have PhDs, but they have an unorthodox take on something that could be pulled from pages of a science fiction novel. So we've backed Atom Computing in our first fund. That's a quantum computer company. The founder was Ben Bloom, was one of the most precise clock makers in the world. He had innovated a new atomic clock in his PhD work, and he was building on that to entangle atoms in an array. And so this was fascinating to us, and we backed him. There's a small portion of investments that we do back people who have degrees, but they got to be kind of mad scientists.
No, that makes sense. So it sounds to me like it really comes down for you at the pre-seed angel stage that you're looking for like the right person to bet on more than the product. The product, of course, doesn't have to be out in the market having an insane amount of traction. You're trying to find it pre-significant traction. Really, you're trying to get in at the absolute earliest stage.
Yeah, one of my favorite stories to back this up is this company Lambda Labs that we're big investors in. Currently one of the leading GPUs in the cloud providers. Outside of the big guys like AWS, they're competing with them. But I'd say maybe on this, in terms of the independent GPUs in the cloud, their competitors, someone like CoreWeave, maybe your listeners have listened to. But these guys are incredible because when we first, like Stephen Balaban, the CEO, he was too old by a year to apply to the Thiel Fellowship when we met him in 2011. And yet he still wanted to be, within the circle of the program. We ended up making him a mentor in the program, which is funny because he's only like a year or two older than some of the people in it. And so we kept in touch. When we started 1517, he had started this company it was still called Lambda. He had started a photo app company as part of Lambda that had really taken off. Stephen's an expert in deep learning neural nets back then. He and his brother had built one of these early apps where where if you remember, it was like you take a photo and then you can turn it into the style of a painting like Picasso or Van Gogh really quick. That app was doing really well. They had something like 180,000 downloads. We had made an investment. And then the competition moved in. There was an app called Prism, started eating their lunch. Danielle and I like to meet with companies every 3 months or so. We had caught up with Lambda maybe 3 times, so almost 6 months or more. And their morale was decreasing each time because, their engagement was dying, competition was stiff. And so we thought they were going to shut the company, but we showed up one day and there was all this bubble wrap and cardboard boxes. And we're like at this Palo Alto apartment where 3 people were jammed inside. And we're just like, Steven, did you guys become a computer company? And they're like, yeah. So it turned out that to run the compute for their photo sharing app, it was too expensive to use AWS. And so they built their own workstations on premises to do the computation. And they had one of these workstations just available. It was extra. And one of the guys threw it up for sale on Amazon one day for $11,000. And it sold that day to someone in Cupertino. And they drove it over. So they started selling these workstations that they put together. They basically became the Dell computers of machine learning and deep learning. So they were selling laptops, workstations, data clusters, any kind of on-premises compute that researchers, startups would need for deep learning. They went from, after they stopped the photo sharing app, they got up to 100 million in revenue on that hardware business by 2019. And that is a different kind of revenue. Like if you're an enterprise SaaS company, you probably have heard the term annual recurring revenue. Recurring revenue is like the highest quality revenue because you can count on these future cash flows. With Lambda, it's one-time sale, right? You sell a laptop. You don't know if that person's coming back next year. There were also I think it was like 35, 40% margins. So not as high as sometimes you hear of like 70, 80% margins on a SaaS. So their valuation wasn't extraordinarily high, but nevertheless, they had that revenue that was insane. And then they launched their cloud service in 2019. And I think now they're currently up to like 450 million on the cloud product, plus the 100+ million on the hardware. This is a long story, but point being is when we made the investment in Lambda, they were a photo sharing app. If we had judged the opportunity based on the current state of the product or the market sizing of that product, that would have been a big fail. But we love Steven and his brother Michael, and it's just extraordinary. And so when we're looking for the right stuff in founders, we need to know they have that trickery, that cunning that lets them always find a way out and onto something else. And that's always tough to suss out. I would never want to be in a Shark Tank scenario where I've never met someone before and I have 30 minutes to make a decision. That would be terrible. If we can know someone over time, that's the best way we feel comfortable.
Well, I just want to say that's such a valuable lesson that I think everyone should re-listen to right there, because I actually spoke with another VC and they were talking about how the fact that sometimes founders fall in love with their product, right? They fall in love with the science. They fall in love with what their vision is for it, but it's not actually the thing that's going to be making them money, or maybe there's like a dead end that can't be solved. There's a capital constraint, whatever it may be. And the most savvy entrepreneurs, as you just literally outlined right there, they're able to pivot, right? Like who would have guessed that this photo app really that you invested into would turn into what it is today? I mean, a cloud. That's unbelievable. And I think that exemplifies. It exemplifies the fact that like it is really just the entrepreneur and the creativity and the resourcefulness really of that entrepreneur that you're practically betting on, especially at the angel and pre-seed stage.
Do we have this other term we use to think about founders? We didn't originate, but it's this idea of egoless ambition. And what that means to us is someone who has the ambition to truly transform an industry or even start a new one that didn't exist before at a global scale, as someone who wants to be a mover. But on the other hand, they're egoless in the sense of like their identity is not too closely aligned with a specific idea, let's say, or a specific business, that they're able to, receive the incoming flow of information that they're learning about their product, about the world, and they can find creative, resourceful solutions when they're in a trap and change if need be. That doesn't mean you give up your dream. You don't want to totally give up on who you are, but there is a sense in which there's this adaptability. And I think it is tied to the ego, because I think that gets wrapped up like, oh, I'm identified by this company, by this thing. It's my baby. And sometimes that means stepping away from the company or moving on, especially if there's a co-founder split. This could happen. It's like a paradox. We're into of paradoxes where it's like you have a desire for greatness, but on the other hand, if you need to pivot, if you need to change path, then you're willing to do it.
Yeah, that's super valuable. Now, I want to talk and kind of pivot a little bit to what I find so unique about 1517 is the fact that you're looking for, two of the opposite sides of the spectrum, right? Like you're looking for dropouts and you're looking for unorthodox scientists. And I think that that's such a unique duality. I would love to just understand, the common VC. My company, I'll even preface with, we talk to probably 130, 140 startups a week. Everyone thinks they need to go to the Ivy League schools. They need to have an MBA. They need to have the PhDs. They need to go to those in order to even have a chance at raising capital. And a lot of VCs I talk to actually do scout, of course, from those universities. So just tell me a little bit about, I know you had this experience with the Thiel Fellowship, but how did you make this the core of your fund? And what lessons should other startup founders out there take from that?
I think how America evaluates talent is just completely off. We have these old stale institutions that have existed for a long time, very prestigious, but it's not quite clear what the signal is that they're sending anymore. And maybe the quality is more dubious than it used to be. So some of these investors you've mentioned, while they, they ask questions like, did you go to Stanford? Did you work for Meta? Did you go to YC? It's like they are relying on these institutions to try to evaluate the quality of the founders. And since we don't trust those institutions, we can't trust the signal they're sending. That's just our greater skepticism of the so-called authority of the Ivy League. But when it comes to investing, I also just think everyone needs to think for themselves. I don't think anyone will find success, just following on other people who are doing their thinking for them. That's how bubbles form and manias and fads. Maybe some people can eke out a good living that way, but ultimately, I think it comes to an end. So really just, you got to focus on what's in front of you, not what other people are saying about it. This is really coming out of the Peter Thiel's world. Peter, as part of Founders Fund, has been talking for over, 15 years now about how he thinks, and I've come to believe, and others, that there's this technological stagnation. Despite all the press releases out of Silicon Valley, there hasn't been a lot of progress made in fields outside of IT communication. So it's like, if you look at energy, if you look at healthcare, education, biology, healthcare, it's like the amount of progress that we saw over, let's say, since the early 70s in these fields is very, very small compared to, let's say, the end of the Civil War to 1970, that 100-year stretch where you saw in 60 years, you went from Kitty Hawk to the moon landing, just extraordinary progress. It's like we could agree on that diagnosis of stagnation, but I think what makes Peter remarkable was that he was actually trying to fight against it in his funding. When I did some research into scientific progress, one of the things that stood out was always Benjamin Jones at Northwestern as an economist who's looked into the productivity of scientists. And one key finding of Jones is that everyone is starting later than they used to, and they're not remaining productive into their later years. And so we're losing a chunk of creativity because everyone sacrifices their 20s and early 30s on the altar of earning a PhD and earning credibility in the eyes of some grant-making body. So in 1900, or 1920, you look at the average age at which someone got their PhD, it was like 23 or 4. If you look at their first date, the age at which they first published something, again, early 20s. Now, it's like people get their PhD at 30, 33. Their age of first publication is around 30. He looked at age of greatest invention, used to be 30. How old were you when you made the discovery that won you the Nobel Prize? That used to be 30, now it's 40. And this would all be fine. We're living longer, but the thing is, people don't remain creative, sadly, late in their 40s into their 50s. It's very rare to see people keep up that same pace. Now that people aren't conducting radical investigations into nature in their 20s or conducting unorthodox experiments, I think that's one of the reasons that progress has slowed down. And so to the extent that we can fund people, okay, if NIH isn't going to believe in these people, what if we do? And I think the means of investigation, the means of production are getting cheap enough now where, in the past, you might need millions and millions of dollars for a lab. I think it's getting to the point now where small groups of people are capable of conducting these types of experiments. And so those are the types of people we want to back. There's a company out there called Cortex Fusion. This guy's a mad scientist. We always say sometimes is someone crazy or crazy awesome? It's really hard to tell the difference. Jake Levitt at Cortex Fusion is one of these guys where, there are two main ways of producing fusion energy, and Jake's going for a third route that has yet to be tried, taking advantage of some of the quirks of quantum mechanics. And, if he pulls this off, I think that's like Nobel Prize worthy work. And if we're there to support it in the NIH or the NSF or whoever wasn't, then that'll be quite the start of a revolution, I think.
That's really cool. I like that it's really mission driven more than anything. Like, I feel like your underlying purpose is actually to just like fight against almost the inefficiencies of the system as you just defined. Question, I'm not understanding, I suppose, why this happened, but you said people used to get PhDs in their early 20s, right? So 23. Now it's late. I know people that are like 35, getting them because they went to school a little bit late, right? So what changed? Is it literally just inefficiencies of the system, or like, are they adding barriers of entry? What is it that actually changed? Because it's so drastic. I didn't know that it was different previously.
I mean, the incentives of the system changed, for one. So a lot of these universities have a powerful incentive to leave these people in grad school for as long as possible, teaching courses and getting little money for it. I think because the institutions were so young at the time, you didn't have the ivory tower buildup bureaucracy, where now it's like you have these primary investigators who are basically kingmakers in order to get into a PhD program. I mean, we could start with undergrad, where it's like you need the references. Everyone has the same GPA and test scores. So how do you stand out in a PhD? Well, you need strong references from someone. How do you get strong references? Well, you got to, add a decimal point to their view and help out in their lab. All right, you get those references. Now you're in a PhD. Who's going to sponsor your dissertation? Well, yeah, you're going to apprentice in one of these factory size PI labs. And the hope is that if you contribute to this person's work, maybe then you get your PhD. And this thing just happens again and again. Like, okay, now you want tenure track. Like, how are you going to get lab funding? The whole time you're basically creating incremental advances on your predecessor's work because you need their approval in order to make it to the next level. I think this stuff just accumulated over the last century, whereas in the past, that level of bureaucracy had not hardened yet. And so, if you're working in quantum mechanics in the 20s, you're at the cutting edge and people are making discoveries left and right. In that sense, it was probably easier. I think there was less of a teaching load. Universities weren't as big a force in the culture at that time. There could be more reasons. A great question to ask.
I'd never heard that, so it's really interesting. So one thing that I really wanted to touch on, you mentioned earlier that you would never be able to be in that Shark Tank-like situation where you meet a founder in 30 minutes, right? Sometimes founders come to us, they're in this situation where they need to raise money in a very short period of time. If you're a founder and you need to raise money pretty fast, right? So say you have like 30 to 60 days of runway, obviously not an ideal situation, 90 days of runway, who knows? And you just need to raise more capital. How do you have the patience to build a relationship with an investor? As an investor, what are you looking for, I suppose, for those founders to be able to build that relationship?
Well, one thing we've seen over time at a general level, the founders who find success are always fundraising. And what do I mean by that? Is like, even when they're not fundraising, they're building a Rolodex of investors or potential warm intros. I know a lot of founders who hate fundraising because, look, you're getting punched in the face all the time. You're getting punched in the face with the startup, with your customers. Now you're adding someone else kicking you in the nuts, which is these investors who are telling you no. And there's only so much of that you can take. So I get it why people don't like fundraising. But we've just seen that the most successful founders are always pitching. They're pitching in line at McDonald's. They're pitching in the proverbial elevator. They're pitching in real meetings all the time. They're selling their company in some respect and collecting those contacts for the Rolodex. What this prevents or helps solve the problem of is one of the failure modes we've seen, which is like this Captain Ahab Moby Dick thing, where what we mean by that is it happens on the investor's side, but also on especially big enterprise clients, where there's just one big whale that someone is working the relationship on. And it's month after month. They're like, I know they promised that they're going to make the investment or this deal is going to close. We've just been doing such a great work, massaging this relationship. Rather, their runway has run out and all of a sudden they lose that investor or deal. And they're scrambling for intros or something. And they, weeks left to runway. You got to avoid the Ahab thing. You got to constantly diversify the sources of your revenue if possible. And then also the number of investors you're talking to. So nevertheless, it could be the case that you're in a situation where you have to raise money fast. I think the warm intros are just the number one way to go. So it's good if you're not meeting investors, meet other startup founders. You got to do your best part at making those connections, because they're going to be the ones who might vouch for you to the investors that they know. Maybe they're not even like startup founders. It could just be people in your network, especially if you're in ecosystems like SF, Silicon Valley, or New York or Austin, where you just got to find an intro through someone you know. And that way, that person's going to take it more seriously when we get the meeting. And so, like I said, is like we want to know people over time. If we don't have that, we are going to rely on references. So if someone is vouching for you, that's a huge, huge plus in our books. And that'll be the best way to meet people. It's going to be really hard to just like cold email people or hunt someone down on Twitter. It's happened, but the success, the hit ratio is pretty bad. So that's a tough spot to be in.
We call it dating. Like you should always be dating investors. You know what I mean? Like even if it is cold initially, but you have a year to build a relationship with them and get them to follow your progress. Like it's so much more valuable than when, exactly as you described, there's so many startups that put themselves in the situation where they are like, oh, I have this one firm. They're telling me that waiting to do it. They just get in this terrible situation. And everyone thinks, the unfortunate truth, I've said this before, but I say it's delusional optimism is what founders have. The best thing about them, it's what allows them to go after such a big venture. But it's also what might actually stop them from proactively fundraising, because they think that what they're doing is so big that it'd be crazy for an investor to say no. Where obviously, every day you have to say no to opportunities that sound good. You just have to say no. Yeah, you can't invest in everything.
Another negative mode we've seen in this vein is the skeptical nihilist mode some founders fall into. They look at the wider world on Twitter, they look at the news, and they're just like, this is all fucking bullshit. This idiot raised $2 million because he went to Stanford. I can't get anything. It's all fake. It's fake every way up. Everything's a scam. And at a light degree, what you just said reminded me of that. Is sometimes founders are a little complacent in the sense of they're like, yeah, all VCs are douches, and I don't want to meet these people and talk to them because, there's some good ones and I'll know when to meet them or whatever. The thing is, you can't do that. Here's the thing is like, you got to just keep meeting investors. If it's a class of people that you don't like, you got to get over that.
Yeah, exactly. It's like you're in the wrong business if you're going to try and fight a battle against the industry. Like don't pick your battle against VC. You're trying to raise venture capital. You're like every venture capitalist, like you said, it's just not, you don't want to raise from it. Yeah, man. I mean, I think that's so refreshing to hear, because I actually agree. There are the nihilists as well, where they literally just think that the system's against them, right?
Yes.
They think that the VCs are just not deploying capital at all. And what I always say is it's just the companies that are good that get money. They never have a problem. And as ridiculous as that sounds, it's just the truth. And you know it too. If you saw a great opportunity, you'd give them capital tomorrow.
Oh, totally. Yeah, absolutely. Jargon or verbiage. We've just noticed, I guess in the psychology literature, there's this distinction between people with an internal locus of control versus external. Another take on this is sort of the extreme ownership, like the Navy SEALs talk about. So the internal locus of control, those are people who believe they have agency in this world. Okay, they're going to have setbacks and headwinds and obstacles and all this, but they believe they have agency to overcome these things. The external locus of control, these types of founders we've seen, and they could be correct to a degree, but it just doesn't help them succeed. And what do I mean by that? It could be someone who's like, we've seen female founders just spiral downwards, like, oh, the VC patriarchy, they're just all against women founders. It could be the case that it's your specific industry, like, oh, you're not the current fad AI. These VCs are looking over you. It could be the macroeconomic. Oh, we're in a recession and people aren't deploying capital, but it's always something external. It's always some trend or something that they're pointing to. And sadly, that doesn't help. It just doesn't help you solve your problems. Yeah, we look to people who will take ownership over these things, as irrational as that can be.
Yeah, it's a great book. Extreme Ownership by Jocko Willink is what he's referring to. Everyone should read it. I mean, you're totally right. It's surprising. I think it's people that are frustrated with the process, understandably, but it's entrepreneurship. And I'm sure that literally any founder out there that's, built a multi-billion-dollar companies had to overcome some adversity.
Yeah, right.
And everyone thinks it's just their journey. And it's like, no. What makes a great story is the adversity that you face. Yeah, that's really powerful. I'm glad we went down that. That's exciting. Well, hey, I'm going to ask you this follow-up question, because I asked you the timing one for a very specific reason, because I thought that this was a very cool thing I saw about your fund. You were the first investor in Loom. Is that right?
Yeah.
Just make sure I'm understanding.
That's right. Yep.
So this is crazy. So for anyone listening, you like Loom is so big now to where I say, I'm going to send you a Loom. that's when the company's big. It's like Google it. You know what I mean? It's like when the
Right.
function, but like you use it, is it adverb? Yeah, it's an adverb.
I guess that's a verb. If you're,
It's
I'll
a
send
verb.
you a
It's a
loom.
verb.
That's a noun. That's a
Exactly.
noun. You wouldn't say
Oh
I'm going to
man.
loom it, but yeah.
Oh
No.
man,
Yeah.
losing my mind here. But you get what I'm saying. Like it
Yeah.
has become its own term, which at that point, that's when it's a very successful company. So being the first investor in, that's very cool. But what I found really interesting is Joe Thomas on your site. It says they met us weekly, gave us feedback, and wired us money before the deal docs were done as our pre-seed lead, so we wouldn't run out of money 48 hours later. I just wanted to hear a little bit about that. How much time did you have to speak with the founder? What made you because in my opinion, right, you obviously knew their financial situation would probably be pretty dire at that point, right? So from what I've seen, whenever there is a desperate founder, they kind of give off desperate energy. They give off this neediness, which is revolting for capital, right?
Oh, I know.
Yeah. So
I mean, the dating analogy is good there, right? I mean, women will tell you they don't want to talk to some desperate, needy guy.
Exactly. Yeah. Literally, yeah. We're speaking the same language. So I'm just curious, what was it about? This could be out of context. I just grabbed this from your website. But what was it about your meetings with him that gave you the confidence that he wasn't just looking for money and he would actually use it properly? Tell me a little bit about that.
Yeah, sure. It was a founding team of three: Joe Thomas, Shahid Khan, and Vinay Hamarath. Like the three of them had been working together on this thing for like 6 months. Knew Shahid going back, I think at that point, 3 years or so. When he was a teenager, he applied to the Thiel Fellowship when we were still running it. He did not win a fellowship, but he kept in touch with Danielle mainly over those years. He had all these other ideas that he threw her way. I can't remember them exactly. One was like a couch surfing idea, something like that, or a Craigslist for something else. I don't know. It just wasn't good. But Shahid reached out to us it must have been 2015, 16. Can't remember exactly when the company started. And he was working with Vinay and Joe, and they had this idea for using video as a tool to help designers give feedback or get feedback on things. They had no customers. It was like January, early in the year. And so we gave them this piece of feedback that we give a lot of startups. A lot of times people come in for a pitch. It's not yes or no. It's more like, okay, here's what we'd like to see. Here's a milestone. And one of them was just like, get those pilot customers. So over the next couple of months, they got a pilot customer. It was Brain FM. I think it was like one of these early AI music companies, or I can't remember exactly, maybe a mood music company. And they were using it and liking it. I think we caught up. They got those early customers. And then they reached out. I think they had released the product. It was known as Open Test on Product Hunt. And so there was a little bit of a bump in interest in the product. And they said, hey, we'd love to pitch you guys again. Come down to our apartment. We love seeing people where they're at. They lived in San Mateo, lived and worked in the same apartment, all three guys. We took them out to lunch. We took them to Chipotle. And what stands out about Chipotle is, the Chipotle people really test the boundary of maximum burrito capacity. So that's what these guys wanted. And what's more, at lunch, they cut the burrito in half because they wanted to save the second half for dinner. And that was one of those things where Danielle was like, oh, wow, these guys are really pushing it hard on Open Test, what became Loom. They had this great launch on Product Hunt. We were impressed. We had known them over that period of time. And so we decided we were ready to invest. And even though they said, that they were going to run out of money, I think, I don't think it was 48, maybe it was 48 hours. And I remember it as something like they had at least a week. But to us, it was like, wow, let's help them build on this momentum that they had off that launch. They needed the money to pay the bills, to go back and forth on some docs. Felt like, okay, that's going to be too slow. So we trusted them enough to wire the money and then sign the docs a couple days later. And it was immensely rewarding working with them over the years. They kept with the general idea of the product, but they iterated and pivoted within that to this day. As you mentioned, they were acquired by Atlassian for nearly $1 billion. We were the first investors in. That was a huge win for our first fund. We also had a company go public called Luminar Technologies in our first fund. So we're doing extraordinary things. They fit our dropout thesis. The other company did too. It's one of these things. You mentioned my book too at the beginning, is like, I decided this is a good enough business story to write about. No one else wanted to write about it. It's like these two people in VC who have no business being in the business, working with these people who have no degrees, somehow have managed to build a very successful pre-seed fund. So if your listeners are interested, go more behind the scenes of all these stories in the book.
Yeah, absolutely. I'll link it below. That way everyone's able to reference it. I just can't get over the lesson of make sure you just start conversations with investors so much further in advance than what you think. I'm saying like a year in advance doesn't even hurt. And just, I
Yeah.
imagine people just giving you updates. Like you said, that founder kept in touch. And that's what made it to where when they actually had an idea you were interested in, or when they reached a significant enough amount of like milestone traction, et cetera, then you're going to be so much more likely to have a quick investment like
Yeah.
process with them. I think that that's what people don't realize. They think that fundraising as a whole should take like 90 days.
Yeah.
But
Right.
if it should take a year, and then you're going to ask for money, and it can take 30 days. It could take
Yeah.
even less. It could take 2 weeks. You know what I mean?
That's exactly right. And we face a similar situation with our investors. So
Yeah.
there are investors who invest in companies. And when I was at the Thiel Foundation, I was in charge of just going to these different events for Peter and meeting people who wanted money, organizations. But oftentimes it'd take me to events where there were other high net worth people or organizations. And just over the years, I collected all these business cards. So when it came time for us to raise our fund, that's one of the first things I went to, were all these people I just had met at some fundraiser or one or another. And you got to collect these names. It really pays off in the long run.
Yeah, makes total sense. Well, I always near the end, we're already coming up on time. This has already been 47 minutes. That's awesome. So thanks to everyone who's been hanging with us. This is flying by. I always like to end on 2 questions, more philosophical. So I feel like you're going to give some good answers here. But first thing is, obviously right now we're in an unbelievable time in history where AI is causing sort of like a revolution, I think, in terms of like development, growth in different industries. And it's like things are moving faster and more unknown ways than ever before. It's kind of like the next internet per se. Do you have any big bets or any prediction for AI? Like, what's your overall feeling about what's going to happen? Do you want to predict anything with us here today that we can reference many years from now? And
on the investment side with Lambda, that's a picks and shovels play. It wasn't a planned AI revolution investment in 2015, but it's grown into one. It's not backing someone who's doing a ChatGPT wrapper. It's someone who's providing the tools for people working in all sorts of different problems. Extraordinarily successful, and it's great to be a part of their story. We would be interested in other infrastructure plays. We've backed some companies that are working on different chip architectures that are specialized, different forms of computation. That's all something we're open to. And we have in the past backed AI companies, and this is no novel idea, but it's worth thinking about for founders out there, is if you have access to a proprietary data source that the latest, greatest algorithms can train on, I think you're in a stronger competitive situation, competitive advantage than just like, let's say, trying to compete with OpenAI training on the whole internet. So we've backed a company called DeepGram. They do speech recognition, transcription stuff for really specialized professions like doctors, lawyers. They work with the CIA. Anyone where people are recording things with very rare words or very specialized words. Like you imagine a doctor going over a chart, they're full of medical jargon, and they have access to this data to train on. So that's interesting to us. In terms of where it goes, I'm not worried about the robots taking our jobs anytime soon. I'm not worried about the AI apocalypse. I think there's still a long way to go on these things. If we're comparing it to the 90s, I think we're in 95, 96. It's not 99 at the top of the bubble. I think there's some way to go. These use cases are going to get stronger in the next few years. And I think they will make people more productive in all sorts of interesting ways. That's not novel, but we are excited about it. I don't know what your thoughts are, but if you have something that's like way out there, I'd love to hear it.
No, I agree. I think that some people, might be overly think that we're further along. Like you said, I think that there's so much more development that has to come still, but I do think it's growing at a pretty impressive rate. I just remember for me, even using ChatGPT when it first came out to where now it's on the 4.0 version or whatever the newest version is, it is infinitely better. Infinitely. Yeah, I wouldn't use really the first version. And now, they came out with the search function. I feel like there's going to be just some really unique developments. And
I agree. It is a difference in kind, not degree. It is a transformation. I agree with that. Basically, you could say it passed the Turing test, which is quite remarkable. When you look at the results that ChatGPT or Anthropic give you on a research question, it's just like, damn, okay, this is, I can't trust it 100%, but in terms of just the way it's talking, quite good.
It's getting there. There's new AI startup. I can't remember off the top of my head what it is, but essentially it's to help with conversational AI. So it's going to be for appointment setting. I listened to 30 of their different AI voices, and it's in real time as if you're having a real conversation. It's getting to that point. So I just think that
Wow.
in the deep fake side of things, it's going to get really weird really
Hmm.
fast. So
Yeah. Yeah. There was a great book. It wasn't amazing, but it was really good. And now I think very prescient. It came out in like 2012, 2013. It was called like A Working Theory of Love. This guy wrote, I think he lived in San Francisco. It seems like commonplace now, but back then it felt like, wow, this was ahead. It was a story about this guy whose dad left behind all these journals. And so one of these AI companies used it to create a chatbot that could mimic the dad who had passed away, because there was all this data that it was like the one source of data that they had so much of. He's talking to his dad like you're describing, and it's kind of creepy and off, but it brings back a lot of strong memories. I enjoyed the book.
yeah, very cool. Well, let's end on this final piece of advice for founders. Founders that are listening to this specifically that are going to be raising their angel round, pre-seed round. Like, what would you tell them right now? Obviously, it's a scary time in the market. Literally today, the stock market crashed historically low, which is pretty crazy. So I'm sure that's going to have a ripple effect of some kind. People are going to be like, I don't know if I'm going to raise money. The world's ending, So what do you advise in a time of so much uncertainty, in a time of so much, scarcity?
I still think it's a great time to start a company. What we've seen is it's more like the Series A and B companies that have faced the strongest headwinds in the market over the last year. A lot of like flat rounds with great companies. You just didn't see the multiples that you saw in that zero interest rate environment. But when it comes to pre-seed angel, I think there is a lot of money out there. Just make sure you do your planning ahead, that you should raise enough money to last 6-9 months on that first bit of money. And then at that point, you'll reach the traction or hit the milestones you need to unlock that next $1 million to $2 million. If you feel like you can do that, then I'd say you've got the green light. Go for it. If it's your passion and if it's your dream, don't worry about recessions or market crashes on a particular Monday. I think there's going to be the capital out there for you to get started. A lot of great companies have been started in downtimes. Google, it wasn't started, but really rose to prominence. Facebook to some degree when it came to the internet era. And then going back to like Apple in the 70s, great things can start in cloudy weather.
With that, Michael, thank you so much for being here. This is a phenomenal episode. I think that your perspective has given a lot of wisdom to founders. You also have a very impressive picker. I'm really excited to follow along with your fund 1517 and just see what else you're able to kind of predict, because it seems like
we're all on Twitter if anyone wants to follow us there. But thanks for having me on, Michael.
Absolutely. All right, everyone. Thanks so much for being here today on the Startup Shortcut. This was Michael Gibson. If you want to like and follow Startup Shortcut, the links are below, as well as Michael Gibson's links are there as well. Thank you, everyone, so much for listening. I'll see you in the next one.